Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Mike Baudendistel here with us with a Rail Intermodal update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Presented by PowerFleet. I'm Zach Strickland, and today we're watching those volumes recover a little bit off of their little bottom yesterday. So we see this slight little notch in the outbound tender volume index right over here. We saw one right here. This is Good Friday impact, and we had another one yesterday for some unknown reason, and now that seems to have recovered, maybe a little bit of a correction off of what was not necessarily, a true direction of the market, maybe a little bit of shipper activity behavior that we can't account for on a day-to-day, smoothing. But it is smoothing out. And it hasn't dropped any further than it did on Good Friday, so that's good news in terms of overall recoveries. This time last year, we are troughing in the Good Friday impact here, right around 94, about 7% lower this year versus last year. Again, a little bit of a false, it's more like a 10% reduction year over year because of that fact that it was a Good Friday Easter impact, keeping those volumes down. So, not great news, but it is some positive news in the way that it's not dropping any further, and it has recovered a little bit off what looked like maybe a directional shift in the overall volume. So looking at the overall country and the market volumes, what they have done week over week. Looking at our heat map here, we are watching a lot more green show up on this map, which is good news, but don't get too excited. Like I mentioned before, we are clearing that Good Friday, Easter week impact, so not necessarily seeing the increase organically, so to speak. This is going to be more of just a correction from the slower volumes from the Easter week. But there are still some significant stories here embedded in all of these volumes going up. Everything in green here, of course, outbound tender volume index showing a week over week increase. Ontario, California, 14% up week over week. This is one of the most key markets to watch here as we start to see the freight market hopefully recover from its bottoming at some point in the future, or maybe it's already doing that. We don't know just yet. But at the same time, looking at some of these other markets, Salt Lake City, 14.4% up week over week. This is a pretty tremendous week over week increase, regardless of the Easter week increases. So recovery. So Baltimore, Charlotte, a lot of these bigger markets are showing pretty decent size increases. Looking at the Ontario market specifically, we've been talking about this market quite a bit because it is such an important market to watch as we see the freight market kind of undulate. There's all this percolation going on right now in terms of volumes increasing and decreasing. Not everything is going to turn on all at once. Obviously, the government still hasn't, relieved a lot of the restrictions on activities, but we are starting to see some of that stuff really start to pop back up as manufacturers start to consider coming back online and whatnot, and people consider going back to work here in the next couple of weeks or so, potentially in a few states. So volumes on the van side of Ontario, California, really starting to pick up. This is pretty significant. If you look at this chart right here, the van outbound tender volume index for Ontario, we're roughly about the same spot that we were on April 5th. Again, this is totally clearing the Easter week type impact, and we've recovered to a level that's pretty significantly higher than where we were in Easter. So that is a pretty good sign. Ontario, California is one of the, that's where a lot of freight gets staged in a lot of these warehouses, and it moves across the country. That's reflected here in the length of hauls. These length of haul tender volume indexes right down here, you can see long haul, outbound tender volume, California, 101.88. The most significant portion of freight moving out of Ontario, California is the long haul freight moving over 800 miles, and that has had an 8.4%, or I should say, yes, an 9.1% increase week over week in terms of overall volume increases. So a pretty big move out of one of the nation's most key markets in terms of replenishment levels moving across the country, et cetera. So another market to look at is Atlanta, Georgia, of course, the southeastern hub of freight, starting to show a similar pattern, not quite as strong. Could simply be an Easter week recovery for them, but reefer and van rates, or van volumes, both recovering to about April 14th levels. So again, a little too early to call on the East Coast, but again, a good market to watch. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hey, good morning, everybody. I'm Luke Falasca bringing you another broker update. And we've got some pretty interesting things going on in the freight market. While we're still very much so down, it does appear that some areas are beginning to come back online, or at least not as affected as heavily as other areas. So let's go ahead and take a look. Right here, what we have is this is the overall volume level in blue in the United States. No surprise here. We're down. Now, we thought what's interesting, if you see that little downtick about 2 days ago, we thought that perhaps we were going to start diving a little bit deeper, but we kind of bounced right back up yesterday from that. So interesting to see. We're just kind of going a little bit up, a little bit down right now, or moving sideways. So we're hanging out at this near-term bottom. We'll see if it is. We might continue to slip, or maybe we'll go back up, or just stay here. Time will tell. But the good news is things are remaining relatively stable where they are. Still about 10 to 12% lower than where we'd like to be, or where we were about 2 months ago, but staying relatively stable. Tender rejections, on the other hand, are continuing to slide. They are at all-time lows, or excuse me, year-over-year lows. And that is this green line here, sitting at just over 3%. That's going to continue to drive spot market rates down. Carriers will heavily rely on their contracted loads to keep their wheels moving. So as you're looking at the spot market, and if you're moving freight in the spot market, understand that you will have to push carrier rates down in order to create margins. So what we're going to do is try to find some areas of the market where you can find more volume to make up for that, because your margins will be suppressed during this time. Now, what we're going to look at here is Harrisburg, Pennsylvania. We're going to jump right into it. This right here, we're going to look at the outbound and the inbound volume. The blue line is the volume that is outbound from Harrisburg. Now, see this massive surge here? You need to completely remove that from your mind. That's the black swan event of the coronavirus. It's not normal, so pretend like that never happened. What we need to do is compare the volume levels to where they were before all this happened. So you can see right here, the blue line, it's actually right in line with where we were back in late February, right before we started this surge. So Harrisburg volumes appear to be very normal right now. And in fact, they're beginning to go on the rise again. And the green line is inbound volumes, which are actually decreasing. They're beginning to separate further and further from each other, which is a really good sign. That means capacity may get a little bit tighter. As less volume goes in, but there's more demand for volume to go out, that's going to make it a little bit more difficult for shippers to cover their loads, potentially applying a little bit of upward pressure on rates. So if you don't have a customer in Harrisburg, it is a great market to call on, as there may be some potential opportunity there if this gap continues to widen. Now, what I've got here in Harrisburg, the blue line is the volume levels of 2020 year to date, and the orange line is 2019 volume levels year to date. You can see we are right where we should be. In fact, we are slightly above where we were before. This is a really good sign. Harrisburg is performing as it should be. Again, remove that massive surge that we saw there in the beginning of March to middle, late March. That's not normal. That won't happen. That's only going to happen during these black swan events. As of right now, Harrisburg is performing very normal. There's great opportunities there to land customers, especially as that inbound volume drops and outbound volume rises. Great opportunity to surge there and be a hero to the shippers in those markets. Now let's go ahead and look at the tender rejections here. In blue, we have 2020 tender rejections. We saw a massive surge up. Again, that's the black swan event. And we're sitting down at 5%, or about 40% above, or excuse me, 60% above where we were this time, or excuse me, about 60% above the national average. So it is performing much better. And the green line is where we were this time last year. So again, right in line with where we were last year. Harrisburg's performing great, great market to be in right now. And that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your Rail Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
The latest is traffic is falling, significantly, down over 20%. So naturally, the company's margins are improving. So basically, the companies continue to impress investors with how much they're able to improve their operating ratios, and their expenses are dropping faster than their revenue is dropping. We saw CSX yesterday; their revenue was down 5%, their expenses were down 7%. Similarly, this morning, Union Pacific's revenue was down 2.5%, their expenses were down 10%. So they're doing everything they can and more to continue to streamline their cost structure. So one of the interesting things was CSX was talking about how instead of just sort of straight furloughing employees, they're doing a reserve board where their employees are getting full benefits, but in exchange they can be called back within 24 or 48 hours if there is a return to volume. But you sort of see right at the moment, car loads are down over 20%. Intermodal is a similar situation. One that's been hit particularly hard as motor vehicles. Most of the auto plants are shut down, so motor vehicle and parts car loads is down about 90%. Some of those are just the remaining 10% is just more the components that are going to places or finished motor vehicles that are going to dealers and those things. But most of the manufacturers are talking about coming back online middle part of May. But one interesting thing with motor vehicles on the railroads is because they come really from specific plants, that a lot of costs can come out along with the traffic. Here it's not so much that you're gonna not have a train that's 50 cars instead of 100 cars. You're just not going to have to run those cars at all, which has been another theme, is fewer train starts, running longer and heavier trains. Some of the companies are talking about, okay, we're going to serve this customer 3 days a week instead of 4 days a week, in order to have fewer train starts, in order to take those costs out along with the volume. Intermodal containers, you can sort of see here, I mean, those have fallen off similarly with what we saw with carloads, but I'm comparing this here to the long haul outbound tender volume index, and you sort of see how intermodal really didn't participate in the surge in trucking that we saw. Really attribute that to trucking being more time sensitive. Intermodal, you're usually giving up a day in order to save a little bit of cost. Here showing some of the train speeds for CSX Intermodal, and they're up from the past year, and that was up from the year prior. CSX talking about 98% on-time performance within an hour. So very good service there. It does hurt the value proposition a little bit with these super low energy prices. CSX talking about maybe it's a 10% discount to truck instead of 15% discount to truck. That's one advantage of intermodal. You get about half the fuel surcharge. But the rails are not going to chase down the price. They're not going to chase down their intermodal pricing. They're going to stay steady on those. They want maybe increase at a little bit lower rate. So I don't really see a reason why there would be a lot of volume growth in intermodal above truck.
Mike, and it sounds like this is falling right into expectations. I know we chatted early on in the week about expectations we're looking at releases of the upcoming companies, and it sounds like really leveraging these efficiencies and really kind of optimizing their operating ratio is going to be really pivotal for their upcoming months, and so it sounds like they're falling right in line with expectations.
Yeah, I would say the volume is never a surprise when the companies report earnings, because volumes are reported by the AAR every week. I mean, we see those on a daily basis on the intermodal side. So, it's not like the companies report and we're shocked at how bad the volume is. We know how bad the volume is. It's really been, what's a surprise is how the companies have responded to those lower volumes in terms of streamlining their cost structure, and in that regard, they've been exceeding expectations and how quickly they've been managing their expenses.
Excellent, Mike. Thank you so much. Insightful as always. And thank you so much for tuning in. That's going to do for this Rail Intermodal update. And that's also going to bring us to the end of this FreightWaves Now episode. The content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.